Welcome. This is Andrew at Backtest Partners. Today we're going to do a quick demo of the DCA Mega Mapper tool for TradingView and ProfitTrailer. Backtest Partners Mega Mapper, or BPMM, is a custom TradingView study script designed for setting dollar cost average trigger levels in zones of key support and resistance in single cryptocurrency markets. BPMM may be used in combination with Backtest Partners Ultimate, or BPU, in TradingView charting, technical analysis, and backtesting functionality to develop winning cryptocurrency trading strategies. These strategies may then be modeled in the ProfitTrailer automated trading platform for live trading or market research on the trader's testing server. Keep in mind that this demonstration is for informational purposes only. It is not financial advice. Always consult a duly licensed professional before making any new investment decision. All product and company names are trademarks or registered trademarks of their respective holders, and no affiliation or endorsement is implied. If you're joining us on YouTube, please like this video and subscribe to our channel. You can also visit us at backtest.partners, and you can check us out on our Patreon page at patreon.com/backtestpartners. So we're going to be finding DCA trigger levels that match Fibonacci retracement levels for a given market over a given period. This is the chart we're going to build. You can find this chart on the study script page for BPMM on the TradingView website, and we'll include a link to that page in the show notes. All right, BP Nation, let's Fibonacci-fy our DCA trigger levels. And so heading over to TradingView, the first thing we'll do is add a Fibonacci retracement for the market we're analyzing. We are analyzing the Nano Ethereum market on the 4-hour period Binance Exchange. Okay, now that we've drawn the retracement, that looks pretty good. You can, of course, you can do this. You can do this for Fibonacci, and you can do this for any other indicator you may want, where you can set these certain trigger levels. Right? Fibonacci is very popular, and so we're showing you how to do that. And so once you've subscribed to the script, you'll be able to get that at this invite-only scripts here, but we're going to pull it from my scripts for the demo. And so let's see the settings we have available. So test price by trigger calc line, and then your various DCA levels. This script comes with 10 DCA levels. You can enter the buy trigger. You can enter the buy percentage. You need to be able to enter the buy percentage, because depending on how much you buy again at each DCA level, that will change your average price. And the average price, or the buy trigger calc line as we also call it, is what you use in order to do the calculations to match up your DCA trigger levels with the Fibonacci retracement levels. So I'll show you how to do that. We have a test price we already experimented with, and so your test price we call it the test price because ideally you will not have been in a trade yet before you set this up. This could also be called your entry price if you've already entered a trade. Enter the value. And so your test price line comes in right here where we've left the arrow from the complete demo. We kept the arrow there just for ease of not having to redraw them. You can also see we have some styling options here. You can change all of these to your heart's content. We have we have it get consecutively dimmer as it goes down, but you can make this anything you like. And so now we're going to enable the buy trigger calc line. And when you do that, you can see that it actually overlaps the test price because there's only been one purchase, and so the average matches the entry. And so now we're going to do a calculation to determine our first DCA trigger level. And so here's how to do the math. So you take the average price, which is the orange line, and then you subtract the price trigger level. That is the Fibonacci retracement level, or any indicator level you're trying to target, any point of support, resistance you want to try and target. You take your average price, you subtract that trigger level, its price, and then you divide it by that average price, and you take the negative, because what's happening here is you're starting from your current price, which is your average price, your test price, and then you're seeing how much does the price have to fall on a percentage basis from where I am now to hit this trigger, this threshold, right? And so we're coming up with the percent that you have to put in at any given moment. So if it was positive DCA, you wouldn't make it negative. And so we take our average price, which is our test price, right? Because we've only made one trade. And so 0.011404. We subtract the trigger level we're trying to target. We're trying to target this Fibonacci retracement level right here. And so we subtract that price, 0.010976. And now we divide that by the average price, this price right here. And you can always go back and check the video to see the calculation about how we do this. And so we see that we need to, or remember, it needs to be negative. So negative 3.75% will allow us to set our trigger level at the Fibonacci retracement level. And so just for ease of demonstration, we'll make the buy percentage 50%. So every time you make a purchase, you'll be purchasing half as much of your current holding at that time. And keep in mind that if you change your buy percentage, it's going to change your calculations because it changes your average price, right? And so we enable the DCA, and you can see that your DCA level is set right on your Fibonacci retracement level, as indicated by this arrow. And so this arrow is where your trade would take place, right? So the price came down and it crossed your trigger right here. All things being equal, because people typically have multiple buy indicators. And so we can do the next one. So now you can see our average price is the orange line. So we have to take that average price, 0.011258, subtract the next trigger level, 0.009506, divide it by our average price, 0.011258, and we get minus 15.56%. Again, we'll just buy half as much again of the holding, turn it on so we can see it, and there you go. So again, we've targeted the Fibonacci retracement level. Price came down, touched right there. We say we had the trade took place there. So let's do one more. So our new average price, the orange line, is 0.010606. Sorry about that. 0.010606 minus the next trigger level of 0.008319. That came from right here. Divide it by the average price, 0.010606. So, in order to have your DCA trigger level match a real-world single market over a certain period. And so what you would do is you would test various periods and you would try and come up with trigger levels that actually reflect the reality of that market you're trading, not arbitrary Fibonacci theory, but it actually trade the market that you're targeting. So, missed that number, negative 21.56. 50%. Turn that on. So here you go. So you can see our indicators would have had us enter here. This would have been our first DCA buy, all things being equal. The next one. And then we didn't hit this threshold until here. And then we gave the example that if you had like a 2% profit, and then say there were other conditions that prevented you from profiting back here, which we can see. What would we have been back then? See, our average price was here at the times, so at no moment have we hit a gain yet in the price action. So we add back level 3, and you can see now the price actually ascends above our average price line, and say we have a 2% profit. I think we eyeballed it. Just going to add back some color here. And so you can see, say you had a 2% sell value set. Well, you would have gotten your 2% profit right here. Whereas if you hadn't set your levels up this way, you would have had a 12% loss. Well, it wouldn't be an event, right? You'd be 12% down, and you'd be a little less happy, a little less slappy, a little less wealthy. And so I hope that was helpful for you, and I hope that BPMM turns out to be a tool that will help you in your trading and your successful strategy development. If you found this demonstration interesting and you'd like to learn a little bit more about using BPMM, I encourage you to visit us at patreon.com/backtestpartners, where we do an analysis. We actually compare, we come up with DCA levels and using BPMM and BPU, and then we compare the performance of those levels against the sample Fibonacci levels provided by ProfitTrailer on their wiki page. And so you can see how those sample settings stack up with our backtesting trading script. Thank you very much, and to our success.